What's happening? JC here. Listen, I've been doing a lot of work uh, lately, and I've come across a lot of things. So I wanted to put together a clip to share with what I found for those of you who may have been affected negatively from COVID, from everything that's been going on lately. So there's just a few main topics I wanted to hit and share with you about what I found so far. So the main things that I wanted to just briefly explain are, first of all, your current mortgage, your personal debt, what you can do about that if funds are tight because of this current situation that our economy is going through. And the next thing I wanted to talk about are a couple different loan options. These are primarily for business owners, small business owners, but there's a lot of you folks out there that are either self-employed or independent contractors, or even have a side hustle where this may be applicable. So the first thing is your current mortgage. If things are tight, I'm sure lots of you have heard about rent forgiveness and or mortgage forgiveness because of the situation. I've looked into it myself, working closely with mortgage lenders. I'm a little more educated than the average Joe out there. And so basically what I've found is that the hot topic, the big phrase that you hear a lot about right now is the phrase forbearance. Now, of course, the typical mechanisms for people who are in trouble are still there. Short sales are available, foreclosures are there, bankruptcy's there, but the thing that everyone's talking about right now is forbearance. So what does that mean? Well, a traditional forbearance is going to be a situation where your lender basically allows you to pretty much press pause on your mortgage payments and just go ahead and lump those on to the end of the loan. It sounds like a really great deal. And, you know, I think most of us would jump at that opportunity, whether we've already currently lost our jobs or we're just concerned that funds may tighten up on it. Now, here's the thing. Most mortgage lenders are not doing a true forbearance. The most common thing that I've seen is a kind of a bastardization of a forbearance, to be honest with you. It's kind of a hybrid. And what I've seen is, sure, the banks are willing to cooperate, probably under some governmental pressure. It's not part of the bill that was passed, but they're asking the lenders to cooperate, and they are for the most part. But what they're doing is they're saying, yeah, you can go ahead and take 1 month, 2 months, 3 months probably up and not pay those. However, on month 4, all those 3 months are going to be due in addition to month 4. So now 4 months from now, you're going to have a payment times 4 instead of what we traditionally know of forbearance is, which is to go ahead and add those and basically extend the length of your loan. If you had a 30-year fixed loan, you're going to have a 30-year plus 3 months. Make sense? Okay, that's not the case. So if you're going to seek that relief, the payment relief, just be well aware that could be the case with your lender. Like I said, not all lenders are doing that. Only one of so many banks I've heard of is Navy Fed, actually, that is doing a true forbearance. But my personal lender and a lot of other lenders out there are doing this alternate version where it's a balloon payment, basically. Not attractive. And you know what? It's good, because if there's any way we can possibly keep our rents and our mortgage payments live, we should keep them going. Not because of our personal circumstances, but because of the greater scheme of things. There's significant impacts if everybody has that freely available to them and jumps at the opportunity. There's secondary markets, investors, and liquidity that frankly is beyond my pay grade, but it could greatly affect our ease of use with getting new mortgages or other loans and things like that. So go ahead and look at your options, but just be aware. That's kind of an eyes open warning for you guys. Next couple things are a couple different loans that were part of that stimulus package that went through both sides of the government and was signed by the president last week. We've got 2 of them. We've got one of them called the EIDL. Stands for the Economic Injury Disaster Loan. It's an SBA loan, so it's for business owners. You don't have to be incorporated to be a business owner. You can be a sole proprietor. But that's a SBA loan, very similar to a traditional SBA loan. However, they've eased up on some guidelines. Most SBA loans require a personal guarantee. Most of them require some sort of collateral, and even I believe they even have leniency on credit worthiness. I mean, they're really loosening up the guidelines to make sure that everyone who's running a business. This is an effort to keep small business open, right? Because small businesses are the ones who are being impacted the most in this economic disaster as a result of COVID, right? So they're really loosening up the reins on what they're willing to do under this specific program. The loans can be large. If your business has higher operating costs, I think it can go up to about $2 million. There's lots of other details to the loan. It can be used for payroll, for fixed debts, accounts payable, other bills, and things like that. So that's one route. A really cool thing that they brought out as well is called the PPP. That's called the Paycheck Protection Program. Okay, so this one is a separate loan from the typical SBA loan, and this one actually has some government subsidy to it. So there is some loan and debt forgiveness built into this program, and it's primarily built for you to keep your payroll, the leases or mortgages you have for your business, some operating expenses, to keep those things going. And this loan is going to forgive a large percentage of those business vital expenditures. So that's pretty much it. Not a super long chat right now, but I just wanted to let you know what I've come across over the past week or two, not only looking into these things for myself, but for clients I've worked with who are wondering what's going on. There's so much uncertainty and there's so much data to wade through. It's nice to have someone put it together briefly and simply for you. So it's not as all-encompassing as it could be. And if you're interested in any one of those programs, please let me know, because I have a great small business lender that I work with directly, and I would be happy to connect you with him. Those guys are all slammed right now because of these new programs that are coming out. But just let me know, and I'd be happy to connect you, and they can definitely run through all the details. I've got, just on the EIDL package alone, a PDF document explaining it that's over 30 pages. So it is in depth. But that's the basics. Hopefully this is helpful to you. Let me know what you think, and I look forward to talking to you soon.